Guys, good morning. Great to be here today. We're going to be talking about flying cars today. Actually, just kidding. We're going to be talking about stablecoins because everybody talks about stablecoins. But I did, one of my previous companies was a flying car. We actually built a fully functional one. So if you want to talk about flying cars, we can speak about it after the talk. So now back to something more mundane, but I think equally exciting, stablecoins. We can go through this very quickly because I'm sure you're all aware of this, this is a market that barely existed 5 years ago, and it's been growing very, very fast. The dip there in 2023, that was the Terra Luna crash, but basically it's been growing fast. We're now past 300 billion in market cap, and it's fairly uncorrelated with the crypto cycle. Now, again, this is something very familiar to all of you. The interesting thing about stablecoins right now is that it's massively dominated by two stablecoins, USDT and USDC. And so all the other stablecoins, main ones, are basically like only 13% of the market. But I think what's even more interesting is that if you look at non-dollar stablecoins, that's way less than 13%. We're talking a couple of percentage points, right? So effectively, the stablecoin market equals dollar stablecoin markets today. And it has all kinds of interesting implications, including on public financial markets. If Tether were a country today, it would rank number 7 in the world as the largest buyer of U.S. treasuries by country. And actually, countries don't buy treasuries. It's financial institutions in those countries that buy treasuries. So that probably means Tether is probably one of the top 3, maybe top 5 largest buyers of U.S. treasuries. So 5 years ago, U.S. was very worried about China bringing down U.S. financial system by starting to sell treasuries massively. It's probably time to start worrying soon about some of these stablecoin issuers being able to have the same kind of influence on the U.S. financial market. Now, so why are all the stablecoins U.S. dollar denominated, and is this going to last? And actually, what I'm trying to convey to you, or I'll be conveying to you today, is that no, this is really going to change. Right now, actually, if you look at quote-unquote official numbers, more than roughly 90% of stablecoin transfer volume is for crypto trading. Actually, I think this number massively still underestimates the real number. I think the real number of basically stablecoins related transfers is probably higher related to trading. And if you actually look at the circulating supply of US dollar stablecoins, of stablecoins, I would say right now it's probably 98%, if not more, related to crypto trading, both spot and all kinds of other use cases, including as collateral for derivatives. So the reason why all of the stablecoins are effectively dollar denominated is because we live in what I would call the first era of stablecoin. And the first era of stablecoins is stablecoin effectively used pretty much only, or until now, they've been used pretty much only for crypto trading purposes, direct and indirect. And this is another example of just to kind of show that. So if you look at official numbers, basically, you look at Binance wallets. I think these numbers are, from February, from about a month ago. So there was about almost 50 billion sitting in Binance wallets, right? One exchange, so this is probably what, like 15% of all the circulating supply of stablecoins. Actually, I think this massively underestimates the real volume of stablecoins sitting on Binance because, as many of you know, probably most of the traders, particularly large traders, they don't keep their assets directly on crypto exchanges, right? They keep them with custodians and link them to the exchange. So I would not be surprised if the real number of stable coins sitting on Binance or related to trading on Binance would be way more than this, and like more than 100 billion US dollars, right? So this is just an indication of the fact that, again, effectively stablecoins supply today, it's all related to crypto trading. But we are now moving to a next era, or the second era I would call of stablecoins, and this is stablecoins being used for real-world financial services. Now, if you look at real-world financial services, in comparison with those, crypto trading is just a blip, like it's a rounding error. So if you just look at one specific traditional financial product, which is Euro USD FX trading, the volume of that trading daily is roughly an order of magnitude higher than all of the crypto trading of all of the crypto pairs on all of the centralized crypto exchanges, right? And it's just one product. Arguably, it's a very large traditional financial product, but still, this basically shows that the real opportunity for and the real market for stablecoin is not in crypto trading. It's in traditional financial markets. And what I mean by that, well, so we basically, I believe that all financial services will inevitably end up on blockchain, right? Because it's just a better technology for storing and moving financial value than anything else. And you know, if you compare it to internet, many of you were still not even alive, but in like mid-90s, when people were talking about internet, you know, this brand new technology, you know, that the real visionaries were saying, you know what, this is gonna replace everything, internet is going to be everywhere, simply because internet is a better technology for storing and moving information, and every economy is based basically on information, on information flows. And that's exactly what happens. So it's very clear that financial services are going to move on-chain. And if you have the financial service on-chain, you need to be able to settle it against the currency in which it's denominated, right? And so there is now this one argument, well, dollar stablecoins are everywhere, so financial services are going to dollarize. Countries are going to dollarize. Europe is going to dollarize. No, like this is just not going to happen. And the reason that it's not going to happen, it's politics, because money and so the ability to issue money and what is called monopoly on violence. So think of, you know, people being put in jail or war are the two core privileges and symbols of sovereign power, right? So countries are not going to give up their currencies just because financial market is pushing one way or another. So, and actually, I mentioned Libra there because remember when like Zuckerberg decided that he wants to have his own currency, it was entirely legal. There was no laws against it. Basically, the Congress shut it down instantly. I mean, they told them, guys, you do this, like anybody who touches this, you're in big trouble. So this is basically exactly the same case when it comes to stablecoins when they start growing. So now, what does that mean for other stablecoins, for non-dollar stablecoins? So for example, let's look at the euro, right? So if you look at the euro versus dollar, typically the euro markets or euro-denominated markets are about a third of the size of the dollar-denominated market, right? Around 30% roughly. So yeah, less than dollar, but still very significant. If you look at the stablecoin market today, it's not 30% of dollar stablecoin. It's only 0.2% of dollar stablecoin, right? So that actually tells you that if really traditional finance is moving on-chain, we have actually a huge, huge gap to catch up there. This is not just, you know, me shelling something to you as a stablecoin issuer. There was a study published in February by Standard & Poor's. They don't have any horse in this race. And basically, they were saying their estimate just for euro stablecoin markets in 2030, so that's actually 4 years from now. That's not very far, you know, far away from now, is 570 billion euros circulating supply, right? So that's more than twice the current US dollar stablecoin supply. And this is all driven by the tokenization of real world financial services. Because you will have to, if it's, because in Europe, specifically, Europe is not going to give up the euro. We will have these financial services still denominated in euros. And if you want to trade them and settle them on chain, the currency needs to be on chain, i.e., it's a stable coin, right? That's their euro currency on chain. Payments are the first real world use case, as you know, like everybody's talking about stablecoin based payments. Massive growth just last year, almost 1,000%, so six, sevenfold growth, because it's just so obvious, like how this technology is better than all the legacy systems, right? Just one simple example or two simple examples. One is that if you're trying to move money through banks, like it doesn't work in the evenings, during the night, doesn't work on weekends. Stablecoin work 24/7 every day. But I think the real the real power of stablecoins is the fact that if you're actually moving money, and those of you who have ever tried to send euros, for example, to US, and that's a super efficient corridor, right? This is not like moving money from Ghana to Peru. Even that will take you 2 days. If you're trying to move money from like less large corridors, for example, Africa to LATAM, easily, 4 or 5 days for the money to arrive in your bank accounts. As opposed to the stablecoins, for example, now, Schuman, we're fully enabled, financial company. We have an EMI payments license. We can literally, if it's euro to euro, we can settle it, deliver it to your bank account with under 1 minute. If it's dollar to euro, for example, we can deliver it into your bank account in 10 minutes. Doesn't matter where the money is coming from in the world. But the payments that's just the very beginning, right? Because that's kind of the most obvious use case. But effectively, anywhere you look now, you will see that real world traditional financial service companies are moving on chain. And then just to use again example, for example, these are US mostly examples in stock exchanges, asset manager, banks. It was the US ones that started, but the rest of the world is catching up. So for example, in Europe, the two largest exchanges, stock exchanges, Euronext and Euroclear, that's the Frankfurt Stock Exchange and Paris Stock Exchange, all of them are already starting to work on tokenizing. So who will be the winners, right, in this crypto world of tomorrow, in this second era of stable coins? So I think this is going to be players who build not just for dollar, but who build for local currency. So because most of the world doesn't run on dollars. Dollar is the most important currency, but most of the world doesn't run on dollars. As you can probably see, if you go and buy a coffee, try to buy it with dollars. See what the merchant tells you here in Cannes. It's also very important to be able to get from and into cash instantly, right? There's no point building a financial service that takes advantage of blockchain, that it's atomic, it's instant. If at the end of the day, when you then want to exit out of this financial instrument and get money into your bank account, you're going to have to wait a day or two. That's no longer instant, right? So the whole benefit of tokenizing that financial product is kind of lost because you're still stuck with the restrictions of the old system. So therefore, you need to be working with stable coins that can get you in and out of the stablecoin into cash basically instantly. Again, it's one of the things that we have, for example, fully enabled. I think the other thing is you need to be licensed and compliant. So licensing and compliance has been seen traditionally in crypto as a big blocker and a problem. Actually, that's one way of looking at it, but at the same time, it's just a massive moat as well. It's something that, because once you are properly compliant, you're regulated, you're licensed, you have an advantage over others who are not. And your other advantage is that you can suddenly access much, much bigger market because, again, typically regulations, restriction who you can sell to if you're not compliant. And the last point, I think you need to be smartly independent, right? So there's now a lot of traditional financial companies who are starting to build these, tokenized financial products, including in payments. Look, I think all the large transactions, we all can, I guess, agree that all the large traditional players they're slow, right? Banks are slow, most of them are slow. So I don't think it's them who are going to win. It's really going to be people like you who are builders, who are building these things as entrepreneurs from scratch. But it still makes sense to build partnership with these large institutions because A, they have, if you're moving into that kind of a real world financial services, and particularly if you want to start selling into institutions and large corporates, you need to have the right credibility, and you actually already ideally need to have a relationship with them, right? Because try to sell something to whatever, Shell, will probably take you 2 years to get through all of it. Whereas if you are partnering up with a bank or another financial institution that's already working with them, it'll probably take you way, way, way less time. And this is just an example of, don't try to read this. This is too complex. That's exactly the idea. But this is an example of like the mode that you get if you're properly licensed. So this is an example of a flow where on the left-hand side, money being sent through an e-money company from Europe to Africa. So one user in Africa is sending the money to another one. Sorry, one user in Europe is sending money to another user in Africa, or vice versa, go through an e-money company. If you're not fully licensed, if you're providing this service and you're not fully licensed, like for example, these stablecoin payment orchestrators, you need to rely on all kinds of third parties. This is what the flow looks like. This is what the same flow looks like with us, right? Because we have all the licenses. So we can basically sidestep all of these other players because we have these licenses, because we're compliant. And the difference in complexity means that you have fewer people to pay or fewer intermediaries, so you can be cheaper. The money is flowing through fewer intermediaries. That also means that it's probably going to be faster, the whole transaction. And last but not least, you're going to build a much more resilient and stable system because if you have all these players involved, like something can always go wrong at some point in this flow. So yeah, with that, last slide. So this goes back to this whole idea of fiat, right? Like the benefits of on-chain products are lost when you can't get into fiat instantly or out of it instantly. And that's why you need to be working with, if you're building this tokenized product, you need to be working with partners and stablecoin partners who have these full banking integrations, who can get you in and out instantly via APIs, and who basically have the tech stack that fully enables this. Thank you so much for listening, and if you have any questions, I think we still have a few minutes. Okay, flying cars, maybe? I don't know. Oh, there's one. So yeah, so we are a French regulated Euro stablecoin issuer and an EMI, so payments company. So regulated by the French Central Bank. We have a full MiCA license for all of Europe. So we issue stablecoins, our core product. I mean, we're very basically focused on Euro stablecoins. And we have full infrastructure for all of this that we were discussing, including payments, right? So as I said, if you have we can give you an account that you can also then, or we can give accounts to your customers. By account, I mean we give you an IBAN, so a bank account, pretty much any major European country. Bank account works fully across Europe. It's in the name of your customer or in your name. And basically, because we have all these licenses, we can do this effectively for free. So think Revolut, right? Like when Revolut came in and said, look, you want to pay somewhere, some other country, no FX rates because they were so efficient. This is us. Like we basically can now process for you international payments effectively, instantly, and effectively for free. We can basically build this fiat to crypto on and off ramp effectively for free. And all of this is fully licensed, fully integrated, fully API based. Thanks for the question.
You mentioned partners. Who have you partnered with to provide the banking infrastructure?
So we're partnered with large European banks and fintechy banks. So our main custodian is Société Générale, which is one of the biggest banks in France. We are also working with ABN AMRO, which is another of these like largest banks in Europe. And then for the actual more operational infrastructure, I would say we're working with Banking Circle, which is kind of a very fintechy bank. They have a very good tech stack. And then audited by KPMG, etc. So very much institutional grade. I think this is how you need to build it. You need to be institutional grade because that's the only way how you can then access all of these financial services, of very large institutions, traditional financial institutions as they tokenize them. Okay, well, thank you so much. And yeah, if you have any more questions, I'll stick around here, so feel free to catch up. Thank you.